In this video, I'm going to show you how to find high quality, technically sound, data-driven trade levels. I'm going to take you through my method using volume profile to set your own trade levels and show you how to build this daily. I've been trading futures for nearly 10 years. This is my tried and true method that has drastically increased the quality of my trade locations, win percentage, and overall trading. So let's get to it. If you've missed my prior video in this series, go ahead and check that out. Episode 1 covers the basics of volume profiling. Okay, so here's where you start. Open up your chart, basically a blank chart, and you're going to want to layer in two things. You're going to want to layer in your volume profile tool so that it's set so that you can see each day's volume profile. And then you're going to load in your VWAP tool as well, and that's going to be the current, the total session VWAP as well. Okay, load your security of choice. This is the S&P 500 on a 30-minute chart that really gives you the best view. And then you're going to want to zoom out so that you see about a week's worth of activity. Okay, and what we're going to do is we're just going to mark some horizontal levels here of some technically sound, data-driven levels. Okay, as a recap, you've got your D-shaped profile going on right now, and you've got your value area high, your value area low, and your POC, which is where the most volume of the day has gone off. Okay, so we're going to start by assuming that this hasn't started. Typically, I do this right away in the morning before the market even opens. Okay, so we're going to pretend like this isn't even here. So let's start with yesterday's volume profile. Okay, so we're going to mark off the prior day low, which is right here. You're going to mark off prior day high right here. You're going to mark off your value area high, which is right here at 53.02 and a quarter. And you're going to mark off your value area low as well. And then yesterday's POC, which is right here, 52.99.75. It's okay if they're close together. It just gives you a little bit more confirmation that there's going to be a potential, or it's going to be an area that you're going to want to pay attention to. We'll call it that. Okay, you're going to want to mark off this swing high right here. Okay, which also happens to be the all-time high on the S&P 500. And then you're going to want to also mark off any untested, which is why you want to zoom out for a week and see if there's any untested value areas or POCs. And let's stick to the relevant ones, we'll call it. So to the downside, so here's your current price right here. You want to look to the downside. So your downside untested value area is right here at 52, what is that, 75, we'll call it. And then 52.33 down here. And then you've got this POC that's untested as well. Okay, so there's your basic structure. That's just by marking off your volume profile structure lines, okay? And that's honestly plenty to work with, but we'll go even deeper on this one. We're going to mark off a few more levels that I also like to notate. A couple things to notate here. This is a high value node here. You've got a value shift up here, which essentially took place. So you've got this high volume node down here where a bunch of activity took place, and then you have an absolute explosion to the upside here that ripped through right here very quickly. So you have very thin volume trading in between here. This is called a capital B shaped profile. Okay, if you put these 2 days together, you've got a value shift up. So the value is down here where your POC was, and now it's shifted way up here. So this down here, as we come back around, as the market comes back around, you can see that there's very, very thin volume right here between these high volume nodes. And what I call here is thin prints. This is where price has spent very, very little time. So I like to mark those off as well. And right here, it's really down about 52, call it, we'll go right till about there, 52.65. That's when the volume starts to pick up again. This is where the real thin print is. This is where the lowest volume on this violent move up took place. And I marked these in pink. just so I know what they are when price gets to them. Okay, so we've got that, and then there's a couple other pieces that I like to plug in here, which is called the psychological levels, the round 100 levels and the 50 levels. So 5250 I want to mark off here. I also want to mark off 5300 already marked. We're good to go on that front. 5350, we'll go ahead and mark that off too for the upside. And then you can also add in some Fibonacci levels here. Price is pretty far away from there, so if price travels back up there, we would do that. But that's essentially the levels that you're going to want to mark off for this session. So that gives you several levels to work with to the upside. You've got 1, 2, 3, 4, 5, 6, 7, call it, levels to the upside. Your VWAP is a level. So 1, 2, 3, 4, 5, 6, 7 to the downside. So you've got 14 price levels on here to work with for the trading day. Okay, and one last thing for you technical analysts out there. There's an unmistakable price channel right through here. It's tough not to see. You can see how that respects the bodies here of this move. So we'll go ahead and mark this channel off here as well. And that is how you create a really high quality chart to work with, and you just trade level to level. Okay, so your levels are set. You've dialed in some high quality data driven locations to do business. So now what? Well, now we trade the levels. This is a bit more complicated than you may think, but I break this all down in the next episode so you too can implement this technique in your trading. We'll see you in the next video.